Have you ever wondered how traders can read a chart that looks like it was scribbled by a child? Well, let's take a peek at those little sticks with Wicks and uncover what they actually say about the market. These are called candlestick charts. Imagine you're looking out your window during different weather conditions. On a sunny day, you might draw a big smiley face to represent it. And on a rainy day, you could sketch a frowny face. That's kind of like how candlesticks work. Each stick represents the price action of stock, cryptocurrency, or index over a specific period. Let's break it down step by step. 1. The body. The main part of the candlestick is called the body. If it appears white or hollow, like a happy smile, that means the closing price was higher than the opening price during that time frame. Think of this as a sunny day with clear skies. 2. The wicks. Now, the skinny lines on top and bottom are like the wick of your candle. These wicks show the highest and lowest prices reached during that period. If you have both long wicks, like tall candles, it means the market was very volatile. Prices were swinging wildly, but didn't settle well. And here's the surprising part. Even though these sticks look random, they tell a story about how traders perceive the market. By understanding them, you're not just looking at numbers. You're decoding what the market is thinking. Okay, so let's dive into the second part of our candlestick chart mystery. Each little stick on the chart is called a candle, and it's like slicing up a day in the market. Now, think about this candle as having 3 parts, just like a real candle might have a wick at both ends and a body. First, let's talk about the body of the candle. This middle part tells us 2 things. It shows where the price started, the opening price, and where it finished, the closing price. Imagine you start with a ball in one hand and end up with another ball in the other hand. Those are your opening and closing prices. And then on both sides of this body, we have our upper wick and lower wick. These wicks are like the flame and part of the wick that extends beyond the main body. The upper wick shows us how high the price went during that day, but didn't quite reach the closing price. Think of it as the highest point you could touch with your finger if you were trying to grab the top of a candle. Conversely, the lower wick tells us how low the price went, but again, not all the way down to the bottom, just like if someone tried to gently push the base of your imaginary candle. So, when you look at a single candlestick, it's like having a snapshot of that day's market action. You get to see how high and low prices went, what the final price was, and where the trading started. And here's the surprising part. By looking at these candles together, traders can start to spot trends and patterns in the market, just like connecting dots on a map to see where people are moving. Okay, let's dive a bit deeper into our candlestick chart. We've looked at the anatomy of a single candle, and now it's time to focus on its body. The body is like the heart of the candle, what gives us the real pulse of what happened that day in the market. And here's the surprising part. If the body is filled in, that means the closing price was lower than the opening price. Think of this as a losing game. Imagine you have a piece of wood and you're carving it out to make it shorter each time. That's like what happens when we see a hollow candle. Each day is just a little bit shorter because the closing price went down. This indicates that on that day, the market was bearish. The bulls, buyers, weren't as strong compared to the bears, sellers. On the other hand, if the body of the candle is hollow or filled with white or light shading, it means the closing price was higher than the opening price. Let's use a simple analogy here. Imagine you have a piece of clay and each day you're adding more to make it bigger. That's like what happens when we see a filled-in or black-capped candle. Each day is just a little bit taller because the closing price went up. This tells us that on that day, the market was bullish. The bulls were stronger than the bears. So, in summary, if you see a hollow candle, it's bearish. And if you see a filled-in or black-capped candle, it's bullish. It's like tracking your daily progress. Up is good, down is not so good. And here's the neat part. By looking at the body of the candles over time, we can start to see patterns in how the market behaves on different days. This gives us insight into whether the bulls or bears are winning the battle for that particular asset. Okay, let's dive into the next part of our candlestick chart mystery. Those little lines on top and bottom, what we call wicks. Imagine you're cooking a delicious pasta dish. You've got your noodles simmering away in a pot. Now imagine that the upper and lower wicks are like the highest and lowest points where the water bubbled during cooking. The upper wick shows us the highest price the market went up to during that time period, but didn't quite reach. Think of it as the moment just before you take a big bubble out of your pot and decide to let it cool down. The lower wick, on the other hand, tells us the lowest price the market reached, kind of like the point where the water level was at its lowest during cooking. So, imagine we're watching a stock chart for our favorite tech company over the course of 1 hour. The candlestick might look something like this, with a small upper wick and no lower wick. This means that while prices try to go up a bit during that hour, maybe due to some good news, they didn't quite make it, and then they settle back down. When you see a candle with a long upper wick but not much of a lower one, it indicates there was strong buyer interest, high bids, but no big sell-offs. Think of it like a party where everyone is excited to buy in, but no one really cares about selling out. Understanding these wicks helps us see what buyers and sellers are doing during different periods. It's like having insider information on who's staying late to cook more pasta or who's deciding it's time for a break from cooking. Now, let's put the pieces together with a real-world example. Imagine you're watching Bitcoin, BTC, on a candlestick chart. If we see a hollow candle with a long upper wick and a short lower one, it means something interesting is happening. First, remember that the body of a candle represents the range between the open and close prices during the trading session. In this case, it's hollow, meaning the closing price was higher than the opening price. And just like in our story, there are two wicks, a long upper one and a short lower one. Here's what that means in simple terms. The long upper wick shows us that during this trading session, there were many buyers who pushed the price up to its highest point. But notice how quickly the prices came back down once those highs were reached. This suggests lots of buying interest at higher levels. The short lower wick tells us that while there was some selling pressure early in the day, it didn't drive the price significantly lower. So even though the open was slightly lower, the market managed to hold on to its gains. In essence, this candlestick is telling us a story. Bitcoin prices surged during the session, with many people willing to pay higher prices to get in. But once those high levels were reached, not as many wanted to sell at lower prices. This could indicate that the bulls, buyers, had more power than the bears, sellers. So, next time you see a candlestick chart, remember, it's like a weather report for the financial market. Just as weather reports predict changes in the atmosphere, candlestick charts predict changes in price movements. The body of each candle represents the range between the day's highest and lowest prices. Think of it as the high and low temperatures during a day. Then, the wick, or shadow, extends above or below the candle to show the actual closing and opening prices. It's like checking the temperature at sunrise and sunset. Now, here comes the surprising part. You can use this information to spot trends and patterns that might indicate where the market is headed next. For example, if you see a series of candles with longer upper wicks, but short lower ones, it could mean buyers are hesitant to push prices up too much, suggesting a potential downward trend. And here's another neat trick. When you pair candlestick charts with other tools like moving averages or volume data, you can get even more insights. Imagine using weather radar to see where storm systems might be forming. Similarly, traders use these combined signals to make educated guesses about future price movements. The more you understand these little sticks and their wicks, the better you can predict future trends. That's why so many seasoned traders rely on them. By recognizing patterns and understanding what a candlestick chart is telling you, you're one step closer to making informed decisions in the market.